Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 17th of July. All right, now let's just have a look at the plan of attack for this week. Now, of course, the US dollar decline is the big news, okay, across all markets. Last week's CPI numbers really put a dent in the whole overinflation situation in the US, rolls back any sort of future rate hikes. There is one more still priced in, I believe, and we are starting to see this flow through. And I can tell you, a lot of the traders I'm talking to are starting to really froth. And what I mean by that is they're getting super excited at the opportunities for the retracements, because we do have a potential ongoing trend here. And the US numbers, as we go forward from here through to, say next month's CPI numbers, will really tell us if this thing is really over and you're going to see the dollar run to the downside. So let's just have a quick look around the majors and all that sort of stuff, and just have a look, just see where the sentiment is. Okay, the US dollar index, okay, belted down below 100, a big round number. You can see it's sort of stalling there, and obviously coinciding with that, you got a really great clean out move to the top side in euro. Now gold. Okay, a few little speculative sort of, I guess, extra risk on maybe. Okay, the US dollar's rolling back. Does that do anything for global growth? I don't know, but oil had a nice run to the top side. You see oil also really squeezed out a lot of players there. It is back in that uptrend as well. And you've got the Dow Jones Mini, the S&P Mini, and the NASDAQ still moving topside, right? And well, actually, the one sort of decent move around, the crypto is still banging around 30,000 there, Bitcoin. Now, one of the key things, I just come over to the currencies as well, just to sort of give you a run through. Obviously, you'll see much clearer on the major pairs the impact of the dollar, right? Dollar yen, okay, the BOJ. I tell you what, it's always, don't beat yourself up on dollar yen, right? This is a tough one, because the BOJ has been talking tough. The market has listened, and this is a great show of respect for the BOJ, because they haven't had to sell anything or buy any yen, okay, to get this move down there. So it coincides with the weaker dollar. I was saying this about a week or 2 weeks ago. The best time for the BOJ to be sort of really doing things and coordinating this speech is based around when the US dollar will go weak, right? That's when the dollar yen should fall, and they can sort of compound it by saying, you know what, if it keeps going higher, we're going to jump in. But now, and the market was focusing on around 145 as that key level. We're so far away from that now. Does dollar yen trend to the downside? Well, I guess it just goes with the dollar in my perspective. We do have inflation numbers on Friday out of Japan, which may sort of help us with that decision. Okay, so dollar Swiss heading downside. Now, with that oil sort of rolling back from sort of 77 to 74 bucks, you've had that move to the downside. Bank of Canada raised rates last week. We had a clean out down through 130, 150. It sort of got itself back into the range as oil has started to fall. But look at these bottom pairs. They are looking very rosy. You got Euro, Sterling, Aussie, and Kiwi, right? Now, this is where we're going to do a lot of our action, and also the Swiss. The move, the dollar weakness, okay, even if we looked at the dollar index, let me just clear the screen there, is just get some perspective here. It will not just go down in a straight line unless there was some cataclysmic event. So what we're going to be using is our resistance trend lines on the dollar pairs, looking to get into opportunities for further dollar weakness. Okay, now it just comes down to a technical trend trade. So on the euro and sterling and all these other pairs, you're looking for retracements a little bit lower to get into a long position. Okay, sterling, well, it's right back there on that support line. I don't expect sterling to go down just yet. We've got UK inflation numbers during the week. I'll show you that in a second, but it may just drift sideways. Same with the Aussie, a little bit of basically profit taking across the board before the weekend. Now, the Aussie key level here is like a lot lower, right? So you're thinking, well, we're going to work out some strategies to get in this week around the opportunities, because some of these major pairs have sort of left the building. Right. What I mean by that is there's no real easy entry levels to get in. That's where the data can help us. But we also just have to sort of work out a strategy to get into these trading opportunities for the weak dollar, right? The dollar is going to remain weak until we see data otherwise. So that's what I'll be focusing on this week, is trying to give you guys the heads up on how to sort of stagger in your entry levels, right? And it's not about doubling up. You need a plan to get some of these trades in play, and then you can really launch into the opportunities. I mean, the last thing you want to do, and this can create a huge amount of performance anxiety, is if you don't get any trades on and you call the dollar and you're like, okay, the dollar's going down here, right? But you don't get any of it. That's going to create a huge amount of performance anxiety. You're going to load up on opportunities that suck and potentially take a big hit to your account, right? So the best thing to do is just make some money. Even if these things aren't near good levels, you get the opportunity to get into the trade. Even if it's a small position, start making some money. It'll build your confidence, and then you can start working with the key data releases. All right, now just as a little bit of difference here this week, okay, I've sort of laid out the calendar a little bit better to make it easier for you to understand where the key opportunities are. Okay, so just looking at the radar, right, these are the key events this week. Now, this is all about following the fundamentals. Monday, we've got a range of Chinese data, okay, industrial production numbers, retail sales, GDP, to name but a few. And the key pairs that they are going to influence, okay, in the Asian session are the Aussie and Kiwi. Now, I've got the Aussie and Kiwi there because it's not just the majors, right? Look at the, when you come into these trading opportunities, have a look across the board here. See if there's a bit of a mismatch between some of the crosses. They may have a better technical setup, and they're the ones I would be trading. Right now, the just looking at the legend down the bottom here, you can see I've got a little bit of a different scale to the major calendars. Okay, the red, high to very high impact. Okay, so small variations in these numbers will give us a bigger move. The medium to high impact. Okay, medium, you know what? If we get a decent level of variance, that will have a high impact. And then you've got the medium to low impact for the yellow ones. So as we go through the week, you can really isolate here where there's some significant potential major momentum shifts. Okay, we're talking Tuesday, the RBA minutes, obviously the Aussie and the Aussie crosses will be a key factor. Canadian inflation numbers, obviously very important. And then you come back down into the US retail sales, industrial production numbers, right? Some of the building blocks of the US economic background, they will obviously impact the major pairs. And that's where the equity markets, US equity markets, will really come into play there as well. It's the first number after the inflation numbers. So, you know what? If these are weak, it confirms the weak dollar, and we need to be looking to get into these trading opportunities or into these specific pairs, instruments I've labeled below here. Now, if we come into Wednesday, okay, it's a massive inflation day. Actually, it would be a great day to have all the major, say, developed countries or nations, the G7, all their inflation numbers on one day. It'd be very good. We've got to start with the Kiwi, okay, then the UK inflation, two major releases. Kiwi inflation, well, of course, it's important to the Kiwi, but just remember the Kiwi and the Kiwi crosses, the liquidity sucks a fair bit, right? It's very small. So you do get more volatility, especially around the release. UK inflation, obviously important for the to see what's happening in the UK. Inflation has been rocking out of control. It'll be a heads up to what the Bank of England have got to do going forward. The now EU inflation, right? These are the final numbers. So they're not as dramatic as the earlier or just straight up inflation numbers like the Kiwi and UK inflation numbers, but they are well worth having a look at, right? Euro has got clear direction, especially against the dollar. So keep an eye on that going forward. And then down the bottom here, US building permits, right? This isn't like just a low impacting number. It sort of hovers between low and medium, depending on what's going on. So that's our sort of only sort of backup US number after the retail sales, and well worth a look. Obviously, the majors and equity markets could come into play if there's some significant variance there. Then you come into Thursday, okay, very clear day for the Asian session. Aussie employment, Aussie and Aussie crosses in play. Now, this isn't as important as, say, the RBA minutes or inflation numbers. It's their sort of second backup number, and there's a number of different variables in these releases. I think there's about 4, right? So it is an important part of the picture, but just understand it's not exactly like easy to sort of nail. US jobless claims. Now, this is generally a low impacting number, but we have seen it come into the medium impacting numbers with significant variance. The market is watching these numbers sort of weekly. So just keep an eye on it. It's one of those sort of annoying ones where you've just got to, if you have got positions open, just make sure you are having a little bit of a look, especially if you're trading the major pairs or the equity markets. And then we come into Friday's trading. Okay, this is where the sort of Japanese numbers are starting to come into play. Whoops. And so you got the Japanese inflation numbers. I've got medium there, medium to high impact. It's probably medium to low. It's somewhere there, but it really depends on the variation. I've got it sort of a little bit higher on my category because the BOJ has been sort of pretty active around what they're doing. If we get, significantly weaker inflation numbers, right? Well, that could lead to yen weakness and the dollar come back a bit. And then just to finish the week, really UK retail sales and Canadian retail sales. Okay, like the US retail sales here on Tuesday, a major building block of these economies. They aren't necessarily major trending instruments that change the trend, but they will give the market clear momentum. At the moment, sterling's got much clearer momentum or direction upwards. Dollar CAD, well, the loonie is getting caught up between the US move, Canadian move as well, and then the oil move, right? That's where it gets a little bit confusing there as well. But you can see the major instruments to be focusing on there as well. All right, so that's where we are, guys. It's we've got plenty to play for this week. We've got plenty of directional opportunities as far as the trading instruments go. So as we go through the week, and this is what I'm sort of really sort of adjusting, give you the plan for the week ahead. And then each day, the daily market insight, when we are looking at, say, specific pairs and specific releases, really drilling into not just the majors, but the best possible instrument for that potential move, right? It's going to give you a lot more detail, a lot more focus on exactly where to pinpoint the opportunity, and hopefully gets me more focused and gets you more focused. All right, guys, have a good week. All the best. Cheerio.